This afternoon, we're going to start discussing the future of financial products and how we see Bitcoin SV and the blockchain being fundamental to this development. For the next 40 minutes, we're going to focus on the future of banking, financial products, and blockchain. My name's Simit Naik. I'm the Director of Business Services, and I'll be moderating this panel. And I'd like to take this opportunity to now introduce you to our panelists. So firstly, I'd like to introduce Thomas Moser, the alternative member of the governing board at the Swiss National Bank. Hello, Thomas. Great to see you again.
Hello. Hello, Simit.
Hello.
Hello. Great to see you. Thanks for having me.
No problem. Would you like to just tell us a little bit about your role at the Swiss National Bank and the role the Swiss National Bank plays in ensuring sort of monetary stability in Switzerland?
Yes, I can do that. As you already pointed out, I have a very complicated title. I'm an alternate member at the governing board of the Swiss National Bank. That means the governing board of the Swiss National Bank has 3 members, and each of the members has an alternate. So I'm one of the alternates, and I'm also deputy head of the department that is responsible for financial markets and banking operations and asset management. So the Swiss National Bank is the central bank of Switzerland. So we are responsible for monetary policy, for creating price stability, keeping the Swiss franc stable. We do not have a regulatory mandate like some of the other central banks, but so we are really focusing on monetary policy.
Okay, thank you, Thomas. Next up, we have Jason Urban, CEO of Drawbridge Lending, joining us from the US. Hello, Jason.
Hey, how are you today?
I'm good. How are you?
It's great to be in New York. Thanks for having me.
Perfect. Would you like to tell us a little bit more about Drawbridge Lending and what you do in the industry?
Absolutely. So Drawbridge Lending, as the name would imply, lends fiat against cryptocurrencies. But a better way to think about our business is we are really a structured product business inside of the digital asset space. So we help clients produce yield on their assets, lend their assets, borrow assets in a safe, customizable way.
Perfect, thank you. And finally, we have Dr. Edgar White from the White Company, also joining us from the US. Hello, Edgar.
Hi, how you doing?
Good,
thank you for having us here.
No problem, good to have you. Would you like to just give us a brief overview of your role at the White Company?
Absolutely. So actually, BSave is a completely standalone business, and it is the first DeFi product built entirely in and around BSV. As a DeFi product, it is a solution for those looking to earn yield on their BSV holdings, as well as borrow against their BSV holdings at 0% interest. Our solution is focused primarily on the smaller customers, those retail users that really drive adoption of blockchain cryptocurrency over time.
Okay, thank you. So we'll go into a little bit more detail about the White Company and some of the new products they're launching sort of later on in the panel. But I'd just like to, firstly, just throw out a general question just to get the panel up and running. So maybe, Edgar, if I ask you to sort of respond first, what do you think is the single most important innovation in Bitcoin? And how do you see this playing a fundamental role in where banking and financial services is going to be in the next 3 to 5 years?
Absolutely. So for me, tokenization of real-world assets on a truly decentralized ledger with protocol-level features that are complete enough to satisfy the needs of the key use cases and regulators while being simple enough for universal use, that's the single most important innovation. When we talked about real-world assets, that implies anything from Karen's Ferrari all the way to a commercial mortgage on a building in Malaysia. So those types of assets that are traditionally very illiquid, bringing them to a liquid space built on a decentralized ledger is, I think, what's going to keep driving the adoption of blockchain technology and BSV in particular.
Thank you. And when we think about ledgers and blockchain technology, we have this concept of value, but we also have the concept of data. So question to Jason is, what role do you think data is going to play in the way we look at financial services in the next 3 to 5 years, particularly when we talk about a single source of the truth? How do you think blockchain is going to help fundamentally change the way we see financial products?
Well, I think you already see the importance of data in the current financial system. And it's becoming more and more important every day in terms of the product offerings that traditional institutions offer, as well as what you see being offered in the digital space. And as you look at the importance that digital assets are going to play going forward, Edgar mentioned it, to the extent that you're going to digitize assets that weren't regularly available to the average investor, will now become available to them. And to that extent, you're going to democratize investing. Things that were closed off to the average investor and were only held apart for the rich and the powerful will now become more readily accessible to these people. And I think that the blockchain, as well as data, will allow that to manifest itself.
Okay, thank you. And I think you've already mentioned it in parts, but what are the most, I guess, interesting use cases for blockchain that you're most excited about?
DeFi was definitely one of the issues that was raised. I think that there are a lot of ways for businesses to conduct a way to share information, a way to allow groups to behave in this ecosystem.
Okay. And Edgar, how about from your side? What kind of blockchain use cases are you most excited about in terms of being able to deliver a new way of consuming financial products in the future?
Yeah, so I think this organization really is the focus, but in terms of financial products, one of the things that we really see as being revolutionary with blockchain is having that single source of truth. If anybody here has sent a Swift wire internationally, you know how frustrating and difficult that is. And one of the biggest challenges is that there is potential for fraud and mistakes, not at the user level, meaning the sender, but actually at the bank level. There's been some very well publicized issues of Swift messaging being hacked at the bank level. Some banks that process those messages are still using the old dot matrix printers, which is really, quite frankly, ridiculous in this day and age. And what that really results in is, if I'm here sending a Swift payment.
Okay, I think we seem to have lost Edgar. So maybe I'll just go over to Jason and maybe follow up on a couple of things. So obviously within the BSV ecosystem, we have a number of different people who are helping to advance, the different ways we can use a sort of single global ledger. What do you believe we need to focus on more in order to be able to deliver on some of these use cases?
Well, I think some of the things that have always grasped me as important, and I think are important to the BSV ecosystem, are this concept of you have the right to privacy but not anonymity, and embracing of regulation. I think that you're seeing things happen right now, whether it's the digital dollar initiative, the digital yuan. There are things that are being done that are going to create payment rails that will allow digital assets to be more available to the masses. And in order to be accepted into that plumbing, I think that embracing regulation and embracing the concept of responsible business is important. And I think that's one of the things that BSV has done to distinguish itself and put itself forward in the space.
Okay, thank you. And Thomas, we've seen some questionable use cases for blockchain in the past, particularly around things like ICOs. But we've also seen false dawns for the way we can use blockchain for underpinning sort of financial products. What can we do to try and rectify those mistakes or to stop us from making those same mistakes again? Do you think regulation's a key part of what needs to be in place for a single global ledger to underpin these financial products in the future? And how important are things like scalability and ensuring that we never get to a position where financial products just fail because they can't manage the ability to handle those many transactions?
Okay, these are several questions. So let me try to start with the blockchain question. I think you're absolutely right that the first thing to do is to figure out whether you really need a blockchain for the business case that you have. And I think here, because of the blockchain hype, we saw a lot of use cases where you do not need a blockchain. So you really have to think hard about that. Regulation, I think, comes in at the later stage. Once the more successful you become with your blockchain, with your cryptocurrency, I think the more the demand comes in for regulation. And funny, not so much or not only from the regulators, but often also from the clients and from the companies, because they want to have some legal security. They want to be sure that they can securely transact on the blockchain. So I think this is just something that almost automatically follows success. And scalability, of course, I think is very important, because in the end, if you want to have that success and if you want to reach a lot of clients, then you really have to be able to transact a lot of transactions.
Okay, thank you. And if we stay on a similar kind of subject, we've seen the concept of a central bank digital currency becoming more popular, especially over the last 6 months. How important do you think CBDCs are going to be for the future? And what role do you think CBDCs are going to play?
No, you're absolutely right. I mean, there was almost an explosion of CBDC talks and CBDC research recently. So like maybe 2 or 3 years ago, I could have gathered all the central bankers who talked or knew about CBDC probably in this room. And now it's just difficult to keep up with all the research that is being done. And not just research, but also a lot of experiments and pilots. So I think at this stage, central banks have clearly started a lot of work on CBDC, but to go one step further and roll it out, I don't think we are quite there yet. And I think you also have to differentiate between what we call a wholesale CBDC, which is a CBDC that is only available for mainly banks, but also selected financial market participants, and a retail CBDC that would be available to everyone. On the wholesale side, I think that there you will see much quicker progress, because I think the disruption is much less, because central banks already provide digital money to selected financial market participants in the form of accounts. But if you talk retail, then the only central bank money that's available to the population at large are banknotes. And to go digital on banknotes could be a much larger disruption. And I think the fear or the concern that central banks have is that the more you make that CBDC like a bank account, there is a risk that you will disrupt the banking industry, disintermediate the banking industry. And of course, just the fact that you are doing that has financial stability implications. So I think central banks will be going very carefully in this area. And it's also the case that I think that the benefits and the risks look very different from country to country. Also, the motivations look very different from country to country. So I think it will really be up to individual countries to roll something like a CBDC out. But I don't think we are quite there yet.
Yeah, and I just want to pick up on a point you made earlier, which was around making sure that we've got the right use case for blockchain. I think in a recent conference, you mentioned that especially within retail CBDC, a blockchain is not always required. And I think this is sort of evidenced by the fact that the e-Krona project and the digital yuan don't use blockchain. But when we think about what blockchain can give us, in terms of resilience to existing payment systems, transparency of the data, but also a pure peer-to-peer cash system, do you believe that these characteristics could form part of CBDC designs for the future, especially within the retail space?
So you're right. I made that comment. I got a lot of comments following this comment, but I think that it's important to if you have a blockchain, I think that the real use case is not so much the central bank money on it. I mean, you have Bitcoin out there. You can make payments with Bitcoin. I think Bitcoin is a very good use case for a blockchain, because there you do not want to have a central party, a central authority. But if you are a central bank which has central in its word, and central is a main characteristic of a central bank, then I think you do not need for a retail CBDC. You can also do something else than a blockchain. And actually, I'm having a working paper which hopefully soon comes out. It's in the clearing process together with David Chaum and Christian Grothoff, that basically takes up the old eCash idea, which would be a centrally issued CBDC. And I'm not saying that's the only way that you can issue money. I think the private sector can clearly use blockchains for their purpose, but for a central bank, I think a blockchain makes sense if you want to get rid of the central bank. There is one use case, though, when for central bank digital currencies on a blockchain, and that's, I think, when you have financial market infrastructure that is becoming important. And there has been a long tradition for central banks that when you have financial market infrastructure, especially when it becomes systemically important, that you want to have settlement in central bank money, just because this is the monetary asset with the lowest risks. And so in that case, you could issue a CBDC on a blockchain, but then the benefits of the blockchain come from something else. They come, let's say, from the exchange, because you do not need segregated data sources. You don't need reconciliation of the data and so on. So you have a lot of savings, a lot of benefits that come from something else than the money. You can also pay on that blockchain with a stable coin, with anything else. But if you want to have, for financial stability reasons, low risk on the payment leg, then central bank money, central bank CBDC, I think would clearly make sense. And the Swiss National Bank is actually, together with the Swiss Stock Exchange, experimenting on something like this. The SIX Digital Exchange intends to come out and go live next year, and we are together in a pilot with them on issuing central bank digital currency on that DLT, which is not a public DLT, but like in the financial sector, often the case, it's a private DLT, and we have not decided yet whether we will go live with them, but that's one of the experiments that we are doing at the Swiss National Bank. Okay,
thank you. So yeah, there was one comment in there that I think is worth kind of reinforcing, in that the design for Bitcoin doesn't get rid of third parties. It's just, it was one of the misconceptions. But I'm sure that's a point that we'll discuss in the future. So just one last question for you, Thomas. What role do you see private firms playing in deploying what we call private money or stable coins? And do you see some of these entities like Facebook proving a threat to central banks?
So generally, I think it's important to realize and recognize that privately issued money have always played a large role in the economy. Nowadays, that is just in the form of bank accounts, deposits issued by commercial banks. So the fact that we have private entities issuing money is not new. I think what's new now is that this is a different type and different form of money. And I think also in the future, of course, privately issued money will play a role. If the economy and technology moves towards blockchain infrastructures, then you will have different players, but you will also, like in the past, you will have privately issued money. You mentioned Facebook. Of course, this is a big topic. I think a lot of people are concerned just because of the very broad and wide reach that Facebook has, but it's also not a given that everyone that is on Facebook also will use the stable coin that the Libra Association issues. So I think that's still something to be seen, but it's clearly one of the players in there, and there will be a lot of private providers of money. Like in the past, they will just not be the commercial banks that we had in the past.
Yeah, agreed. I think we're seeing a very big explosion of people entering the kind of private money stablecoin ecosystem. And potentially that's one route to maybe looking at doing a retail CBDC in the future. I'd just like to bring Jason in. So Jason, could you explain how Drawbridge Lending helps institutionalize the use of Bitcoin?
Yeah, absolutely. So when you think about an asset, any asset, there needs to be derivative markets around it. There needs to be structures around that, things that have been used in every asset class, whether it's wheat and farming, whether it's oil, whether it's gold. I don't think that there's any difference when you think about digital assets. And so what we help do is we help our clients hedge, mitigate risk, produce yield, do things that you would see services provided in traditional markets. And to that end, we are acting as the drawbridge, the bridge from those traditional deep pools of liquidity into this new asset class. And so that's how we're kind of using or helping monetize that from a standpoint of some of the things that are being done. And I did want to address a couple of issues that Thomas had made about the central bank issues. There are needs for public blockchains in broad-based currencies. I think it's a freedom issue. It's a liberty issue. And when you reference that the digital yuan is not even on a blockchain, well, there's a reason for that. And I think that if you look at the true underpinnings of what a decentralized ledger offers, it's the ability for everyone to participate and there to be truth behind that data, and it isn't manipulated, it isn't fudged or changed. And so to that extent, ultimately you would like to think that you could have a digital asset on a public blockchain, a central bank currency.
Okay, thank you. And what services related to BSV do Drawbridge Lending currently provide?
So currently, we will lend you fiat against your secured, BSV. So for miners or large holders who want to monetize but do not want to give up the upside, the appreciation, we can service short-term, medium-term liquidity needs. For holders, we can produce yield on your asset in a variety of ways, whether it's derivatives overlay or derivatives trade to produce yield, or if it's simply just a simple lending function where we act as the conduit to those users who want to borrow BSV for trading and other liquidity needs. So we kind of, all of our solutions are tailored specifically to our clients' needs. Each client is not the same. Each client has different pressure points. And so what we try to do is assess what that client's needs are and then build a solution that addresses them.
Okay, and what's the experience been from both yourself as an organization and your customers in using the BSV services?
It's been great. We were the first group to ever trade an option on BSV, which was, maybe a year and a half ago now. We are very active in that aspect of the market. We're constantly trying to, one, source new liquidity sources in the institutional space as it becomes more and more readily available on these trade desks. We try to offer a mechanism for people to get into that market and trade with the traditional players.
Okay, and when we move back to the kind of institutional investment, what benefits do you believe this will bring Bitcoin and BSV in particular? Do you see that helping with reducing
Absolutely. I think if you think about digital assets as a whole, every traditional asset is an 80-20 mix. It's 80% institutional, 20% retail. I think when you look at the digital landscape, it's currently flipped on its head. It's 20% institutional, 80% retail. And while I don't think you're ever going to see it go to the 80-20 the other way, I do think that it's going to move to a 50-50 type of a world. And by doing that, it allows for, one, financialization and new products to come out. Two, it provides that deeper sense of liquidity so that the volatility is muted, which is good for people's use cases. And so at the end of the day, I think that's very important. If you're a developer building on chain and the asset, there's some mercantile aspect to what you're building. If the asset's worth, 100 one day and 200 the next, and then 50 the following day, that makes it difficult. And so one part of our job is to, one, mute that volatility for the developer, but two, those deeper pools of liquidity will naturally have that dampening effect.
Okay, and in terms of the future, what do you think that what's next for financial products on Bitcoin SV, and how do you think Bitcoin SV is geared up to sort of support those?
Well, one of the things is the vast scalability of BSV is very important for financialization of anything. I do think that the sky's the limit as far as what's next. And what I mean by that is all the things that we see in the traditional space will eventually bleed into this space. And so whether it's complex derivative structures, whether it's repos and lending and the things like that Edgar was going to speak about, when you start to address all of that, that's all going to migrate in. It's going to make for a more robust ecosystem, a more useful ecosystem, and it's going to allow people to extract value in the way that's important to them, because everyone has a different need or a different use case.
Okay, and as a large-scale enterprise, you mentioned scalability, and I think scalability goes hand in hand with low fees, and that allows you to develop new business models. So just bringing Thomas back in, what do you think blockchain needs to do to I guess, improve its image and start looking at how we can use a public ledger to underpin some of these CBDC services, whether it be retail or wholesale?
As I said, I mean, the use case and the utility really has to come from somewhere else than from the money itself. You need to have some kind of a service where you need a cash leg, and then the question can be, how do you want to pay? Do you want to have privately issued money, or do you want to have state money in the end, central bank money? And I think there are different answers to this question. But the point I made is just if the only thing you want to do is to replace the banknote with something digital, with a token, then you do not necessarily need a blockchain. I think for blockchain it will be. The question of CBDCs being issued on blockchain have really to do with these use cases. The more is done on the blockchain, the more important this question, the more urgent this question will become. And I think one thing that you mentioned in the beginning too is this the question of regulation, because both clients, especially if you go mainstream, clients and firms want to have legal security, and then that's where regulation comes in.
Okay, and I guess in the next sort of 6 to 12 months, how do you see, the CBDC conversation evolving? As we mentioned before, there's a lot of CBDC projects in the pilot phase, predominantly over the kind of retail CBDC use case. You mentioned that SIX and the SNB are working on a pilot to see how blockchain can help the clearing and settlement of trades originating from the SIX platform within the central bank itself. Do you see a future where blockchain can then also be used to underpin, I guess, the next evolution in clearing and settlement systems like the RTGS? And is that something?
That is a possibility. There were some central banks, especially the Central Bank of Canada and also Singapore, that did a lot of tests with replacing the RTGS. My understanding of their work is so far that you do not, as long as you don't really use smart contracts, then you do not need to replace the RTGS. So I think it also depends a lot on further developments of technology and further use cases, especially for smart contracts. But I think that it's very clear for central bank, the more business is done on a blockchain, especially if some of it becomes systemically important, then the central banks would usually want to have a CBDC for the cash lag on these transactions. So I think we will see some, we will clearly see some progress here, but it will be, I still think it will be relatively slow. So what we do, we actually do 2 proof of concepts together with 6. And one is the one I mentioned, where we issue a central bank digital currency on their DLT for the cash lag. And the other one is where we connect the DLT with our RTGS and see what are the pros and cons there. And I expect that we will issue our report on these 2 pilots within the next 1 to 2 months. And then we have to see and take it from there, go to the governing board and see how we take it on from there.
Okay, great. And so just finally, we've obviously seen a huge interest in a new concept called decentralized finance, or DeFi. So I was hoping to get your thoughts on DeFi, Jason, and how you see this playing a part in the future.
I think that DeFi plays a great role for the retail segment of the market, right? It's a great way for people to help monetize their holdings, to lend, to borrow. But if you think about the parallels in traditional finance, when Lending Club came out, it was a P2P lending organization. Now, one of the largest issuers of CLOs is Lending Club, and they are simply going to deeper liquidity pools as demand has outstripped supply. And so DeFi, I think, is going to change the way people do things. And what I predict, and it's my opinion, is that over time, you're going to see that DeFi swing where it always comes back to institutions do what institutions do well, and individuals do what individuals do well. And you will see that move. But right now, I think it's a very exciting aspect of the market. I think that what you're seeing change, it's a democratization of finance in a lot of ways that's needed in the digital asset space.
Okay, perfect. And Thomas, just handing over back to you. So DeFi obviously has a very important part to play in the future, but there's also the concept of what decentralized finance actually means. Do you see any kind of challenging from a regulatory aspect in terms of DeFi?
I mean, this is I think, very interesting development. And as you said, we still have to really figure out, or at least I still have to really figure out where this is going and how it works. I think there are usually 2 issues that are interesting to watch, and these are somehow economic laws. And one is that you will see, to some extent, always a tendency towards centralization again, like you see exchanges, for instance. And this often has to do because of economies of scale and also because of liquidity. So that will be one thing clearly to watch. On the other hand, of course, when you have these tendencies towards centralization, that also makes it then easier again to regulate. Like you have on the blockchains, the regulation really goes through the exchanges. And there you have then again an entry point for the government. So I think this is something that's very interesting to see whether basically DeFi can avoid these gravity laws of economics.
Perfect, thank you. So I guess just to close the panel, we've seen a lot and heard a lot from some of the kind of experts in the field, and it's always important to get the perspectives of some of those leaders in those fields to understand the challenges and opportunities that exist. But it also gives us a perfect opportunity to think about how we can solve those problems. We've talked about decentralized finance and the role it plays, but we've also heard about some of the challenges that we still face when we talk about blockchain and public ledgers in order to deliver certain financial products. So there's still work to do, but understanding what those challenges are is a perfect step for us to take. I'd like to take this opportunity to also thank the panelists for taking time out of their busy schedules to join me on this panel. I think together we can build a better financial ecosystem. There are still challenges that we still need to address. There's still a lot of education and awareness we still need to undertake. But this conference and conferences such as these are going to help us to get that message across. So if there's one thing I can ask you all to take away is to take these opportunities and these challenges and start figuring out how we address them in order to build a better financial ecosystem. And we look at how we use money and how we can make money work for us.